Well, we have a nice little audience here, so we'll make it a little more personal. Who of you guys have heard of LIBOR? Any? Okay, so keep your hand up if you guys were actively involved in manipulating the LIBOR. Okay, maybe a bad joke to start, but this is a little bit of kind of a history of bringing the let's say the LIBOR back home, taking the IPOR and really transforming what is this benchmark rate for DeFi, taking the best of what we have in the blockchain market and making the market more transparent, open, auditable. So a little bit about myself. I've been building in the crypto space for the last 11 years. Really happy to present to you IPOR. And really, these are the base layer of the DeFi credit market. So IPOR is really a protocol with two different parts. One, benchmark rate. Two, a suite of interest rate derivatives. So if you guys are here, maybe you know a little bit about the DeFi credit markets. So we won't talk about the innovation. Let's talk about maybe more of what is missing. So we really lack this term structure. We really have these nice, very innovative, but very short-term debt markets, right? And this is really interesting, but it's not really useful, let's say, if you want to take a home loan from a DeFi bank. Okay, so next, you lack a lot of rate transparency. And that is a little bit because you have a fragmentation between different markets. But what does that lead to? You have different rate behavior across different markets, and you really lack tools that manage risk and also allow you to arbitrage between these fragmented rates. So if we're thinking about how we build this base layer to the DeFi credit markets, we're really looking at two things taking from traditional finance. One is a benchmark interest rate, and two are a set of interest rate derivatives that can underpin these credit markets. Okay, so if we look at the traditional benchmark rates, so let's talk about the LIBOR, the SOFR. So you really have these different banks or financial institutions that are self-reporting rates. And if we look at the LIBOR scandal, we know that there's an issue in terms of trust and self-reporting. But in the blockchain world, we have a much more transparent dynamic for this, which we'll get to in just a second. But publication time, for example, in the LIBOR, what is 11 a.m. BST? Is it this magical time that all credit markets should be based on? Or if you look at something like the SOFR, what is overnight? Someone's overnight is always someone's daytime. And then if you look at volume weighting, you can take the BSBY, which volume weights for all of the transactions across the Bloomberg terminal. So we can take these dynamics coming from traditional markets, and we can actually apply the DeFi mechanics to make it more transparent, real time. So for example, in the DeFi sense, from the LIBOR to the IPOR, in the IPOR, we swap out banks, we swap out financial institutions, and we replace them with protocols. And these protocols are transparent, they're smart contract based. So instead of asking someone to self-report the rates, we actually just tap in to the smart contracts themselves to understand what is the rate in the market. In terms of publication, again, someone's overnight is always someone's daytime. So instead of having this geographic-centric publication time, we get what's the IPOR, or the interprotocol over block rate. It's published and calculated block over block over block. So it's the closest thing that we can get to real time in DeFi. And then finally, the transactions, we can see very clearly. They're going across smart contracts across the Ethereum blockchain. So for example, how is the IPOR index weighted? Well, again, it's taking a survey from these smart contract protocols. So in its initial construction, it's taking from Aave and it's taking from Compound. And it's not technically an offered rate, it's more of a mid-market rate because of how the rate dynamics are structured. So it actually, the interesting part will be how does this index rate go and how does it evolve in the future? How do you ingest, let's say, the rate behaviors from different protocols? Okay, so this also index is a public good. So if we look at something like black box, lack of transparency, you're looking at, let's say the discontinuation of the LIBOR. You have these long-dated instruments that need to be unwound, right? But you don't really have much insight into these. But in the blockchain perspective, we publish the IPOR rate. It's published block over block on chain, which means it's a public good. This public good can be used by other protocols as a smart contract call to another smart contract call. So you can have this similar structuring of debt, of derivatives, of deals. And so you can see these handshake deals or maybe a home loan or auto loan will be structured off of the IPOR index in the same way that you structure these borrowing for different stable coins. And really the value of it is this, we call the IPOR the heartbeat of DeFi because it's keeping the heartbeat of the DeFi credit markets block over block. And as you have this very open data framework, and you have these instruments that are pegged block over block, the real long-term value of the IPOR instrument is how many of these other instruments are pegging to it. What's the value, what's the volume, and what's the velocity of these external instruments that are very clearly making these smart contract to smart contract calls, and this basically public good functions as the base of the DeFi credit markets. So actually the IPOR DAO may be one of the most interesting places where there will be decentralized governance that's available to, let's say, keep something out like the manipulation of the LIBOR. So for example, how do you add new protocols to the index? Well, that's a great question, and you won't be asking me that. It'll actually be a governance decision by the IPOR DAO. Okay, so how do you remove a protocol from the index? We know that DeFi protocols are innovative, they are fast moving, and sometimes they get hacked. So in the case of a large hack, how would you remove a rate from the protocol? How would you actually have this protocol go cross-chain and ingest rates from different money market protocols on another chain, for example, outside of Ethereum, on Avalanche, on Algorand? I mean, this is something very interesting that it's a great case for decentralized governance. How do you reweight the index? You know, how do you actually spin up a new index? So right now there's IPOR rates for USDT, USDC, and DAI, but maybe there will be a new stablecoin that rises up that has entirely different rate dynamics. Okay, and then finally, the last part is talking about the risk management on the instruments themselves. So the risk management, how do you change the constructs and the constants on the AMM features? How do you change the risk dynamics for how much risk the protocol can underwrite? Again, these will be decentralized governance decisions. Okay, so we consider that, so currently there's an interest rate swap that's live on Ethereum that we consider the first instrument that's actually referencing the IPOR. So it's a 28-day peer-to-pool cancelable swap. Now, if you're coming from traditional finance, maybe it's a laughably short instrument, and also the optionality is very strange, but it's something that actually matches the market behavior of the DeFi credit markets. So if we look at who are the parties in here, instead of, let's say, a traditional swap, which is typically bank to bank, you have a very fixed term structure, and then you also have, let's say, the pricing done by an order book or by a broker. Well, we actually use the best that we have in DeFi. So the structure in the IPOR swaps, and also how to bootstrap a market where there has never been one, is we use a peer-to-pool construction. So this passive liquidity pool is actually acting like a passive market maker, and it offers these swaps that can be taken by the traders, where the traders are the peer. Instead of having this rigid structure, it's more similar to an RFQ, or a request for quote. As soon as the trader takes the instrument, that starts the clock to the 28-day maturity. So again, this is designing an instrument that matches the, let's say, the temperament, the term structure, and the behavior of the users of DeFi currently. And then finally, the pricing is done by an automated market maker. And really, this is the secret sauce that really sets IPOR apart. So in building an automated market maker for interest rates, which have a very different behavior than, say, assets, we can't use the simple X times Y equals K pricing that you find, let's say, on Uniswap. Why? Because you're not pricing volume for demand. You're actually pricing a lot for volatility. So we actually have, are digging into the quant toolkit. So we use something called whole white, which is the traditional quant model for interest rate behavior. And then we borrow other models that actually match this DeFi behavior. So for example, we use jump diffusion, which models these volatility spikes and then mean reversion. And so you can think of it as kind of a premium to the upside. And that is really interesting today because the IPOR rate jumped from 2% to 40%, and now hopefully it's mean reverting. It's about 17% before I got on stage. But this is the model that we use to model for these particular jumps. And then we use Longstaff-Schwartz, which is pricing for optionality. So if you're running all these calculations off-chain, then you can do whatever you want, right? It's not reinventing the wheel. Really, what's the beauty of designing this instrument on-chain is getting these very complex mechanisms into a good enough approximation to manage risk for the liquidity providers, while cheap enough to do it on-chain. And so taking an IPOR swap right now is not much more expensive than taking a Uniswap swap. And that's really the engineering beauty behind the IPOR protocol. Okay, so how do you test these models? Well, we only have about 2.5 years of really rate behavior in decentralized credit markets. So again, we go into the quant toolkit. We use something called the Hawks process. So what the Hawks process does is snips out a set of data and extrapolates it over a long time period. So we take this limited data set that we have, we recreate it over a number of different situations, and then we run the AMM models over these different sets to understand how it performs. And this is all done on an internal testing framework called the ITF that we use to backtest the models and how they would behave on chain. And so this is really the interesting process of marrying the quant, the on-chain, to create this instruments. Okay, so the key takeaway is, and it's probably horrible English, you have to pardon me, I am American, but it's really how you take the best known fundamentals from traditional finance, you marry them with all the capabilities that you have in DeFi. You provide something that's really useful and it's designed for the temperament of the people that you're addressing, but you also give the experience that the people are used to from the traditional market. So when institutionals are coming in to manage their rate risk in traditional finance into DeFi, then they get the same experience that they're used to. So what's the future of the IPOR protocol? Well, we see this IPOR protocol as the base layer of the DeFi credit markets. So if we envision it as a software stack, this data layer is really the underpinning. It's the transparent benchmark rate that everyone can peg to. We see this derivatives layer as this kind of stabilizing factor. And because DeFi is money Legos, you can really string them together in a couple of different contract calls to create structured products. And so these are the DeFi Legos that will go into these structured products, different types of funds that we'll be building in the future. And so what's 5 years down the road? Maybe you're asking a DeFi bank for a home loan, and that loan is being quoted off of the IPOR index, and there's these interest rate derivatives that are underpinning the loan, and maybe this entire process is completely invisible to the end party, and really that's the goal that we have at IPOR. Okay, really quick about the team. Our team comes from a deep background, so for example, our quants have spent 20 years in traditional markets as quants in fixed income. Our software developers, they come from enterprise software development, turned blockchain, so they've built banking systems, they've built payment, they've built insurance. So building these robust, scalable systems in DeFi is extremely important. Again, I've been building in the industry for 11 years. We have a very deep talent, and we have great backing by Arrington, Gumi, CMT Digital, GSR. So if you're interested in learning more about the IPOR protocol, visit ipor.io. We have maybe some of the best documentation in the industry. You can check out the quant models behind the AMM, behind all the testing suites. Come talk to us. We have a booth in there. Thank you very much. And yes.